Hello and welcome to another episode of the ICC Academy Livecast, a new podcast series where we take a deeper dive into global business trends and ideas. I'm your host Thomas Paris, and in this episode, we will take a closer look at the evolving role of SWIFT in the digital future. For those unfamiliar, the acronym SWIFT stands for the Society for Worldwide Interbank Financial Telecommunication. As the name implies, SWIFT provides a vital global network for financial institutions, including banks, to send and receive transaction data in a secure and standardized way. Our special guest today is Michael Moon, Managing Director of Payments, Trade, and Communications for the Asia-Pacific division of SWIFT. Thank you so much for joining us, Michael. How are you doing?
Very well, thanks, Thomas. Thank you.
So although this discussion has been cooking for a while, this is the first time that we're officially meeting. So for the audience and myself, can you explain a little bit about your background and your role within SWIFT?
Yeah, so my background, I've been in the financial industry for about 20 years. Now, Thomas, I started out in banking in Australia. About 12 years ago, I made the move up to Singapore. I've worked with American Express, the credit card company, here in Singapore for many years. And the last 7 years I've spent at SWIFT. And my role at SWIFT is mostly what I'd characterize as a strategic B2B marketing role. And what I mean by that is my role and the role of my team is to provide deep insight and understanding of the common problems and challenges and issues that the financial industry is experiencing here in the Asia Pacific and also globally as well. Many of our customers here in Asia Pacific are global in nature, so they're operating both in Asia and other parts of the world. And to turn those insights, those problem statements into things that are actually making a material impact and positive impact on the financial industry, whether it be payments, the trade markets business. We also support securities markets and FX instructions. Mm-hmm. So sometimes that acronym, that you outline there can be a little bit misleading for people as well. That's a function of our history. We've been around for 45 years, and 45 years ago, the mission of SWIFT at that time, if you like, was really to actually, some people characterize it as kill the telex. So kill the old legacy way that banks were instructing each other to do things like payments. So 45 years ago, 300 banks came together around the world and started what has become the SWIFT network. SWIFT has now grown into about 12,000 institutions that are connected to the network. And you might characterize SWIFT's core role as stripping friction from the financial industry. We're a very unique organisation these days, where many firms are in business to maximise financial outcomes and drive profits, and you see fintechs, looking to build a quick product or service and then hopefully flip that or become, the next unicorn, that kind of thing. That's not what drives our business. As I mentioned, we're about driving friction out of the industry. And we do that in a few ways, Thomas. So the way the business model works is that those 12,000 institutions are transacting across the network at scale. So every day globally, there are about 35 million live transactions that are carried across the network. Mm-hmm. On top of that, there's another 100 million transactions that are carried in files between institutions on the network. So you have this very pervasive reach across the network where you have transacting happening at scale between those parties. So that's part one. Part two is we also provide to our customers interfaces and software that lets them connect in a very safe, secure, reliable way to the SWIFT network. And increasingly, and we can talk some more about this as well, we're helping our customers respond to changes, for example, in having more open interface environments where they can interact with not just the SWIFT network, but other networks. So many of our customers are operating in many countries and they're participating in other payment systems and interacting with other parties. They need to be able to reliably and safely interface with those as well. So part two is really an interface and software business. The third part, and this is a really interesting part of the business as well, is we provide a range of shared services or value-added services that are provided on a utility basis, whereby you have a shared service that many institutions are interacting with and getting the benefit from. To give you an example, we have a range of services that help the industry manage financial crime and compliance risk. And we offer, as part of that, one example, tools and services that help parties identify fraudulent transactions across the network. And that's provided as a shared service, so you have a mutualized investment in that product and service that's provided back to the industry in our role as a cooperative and to solve that friction. So those three parts of the business model, the transacting, the interface and software, and the shared services, they're all mutually reinforcing. And we characterize that as a platform in which we provide those services towards the industry. So, that's how the business model works in a nutshell. I think it's quite unique in today's environment, particularly acting as a cooperative that can help the industry solve problems at scale.
Right. Okay. Well, no, thanks for that overview. I think it's very useful. Can you maybe if we take a step back, in your opinion, and based on what you've seen within Swift, can you explain a little bit about what's happening in the payments innovation space today?
Yep. So from a customer perspective, and given all of these customers that we have across the world, and we have 12,000 globally, as I mentioned, we have 3,000 in Asia. You and I are sitting here in Singapore. We've got about 700 or 800 customers in the Southeast Asia marketplace as well. So we're talking to our customers all the time. What they tend to do is come back to a problem set in three areas. One is directly to this question about innovation, and many of our customers are confronted by a lot of change that's happening with technology, new entrants entering their marketplace, and our customers are genuinely working really hard through that problem of what does my business need to be in the future to be competitive. So they have this eye to the future, this eye to actually innovating their business towards these emerging need sets that customers have. So that's part one. The second problems that the customers have is compliance and security. So if you're in the financial industry, you have a non-negotiable, unwavering responsibility to always act in a compliant and secure manner. And so our customers have a very firm mindset towards actually managing compliance and any security risks that might exist in their business. And then the third part for customers in terms of the problem set is they need to do this in an operationally efficient manner. So they need to do it with a mindset on driving down the cost of doing that as well. So these three problems, they're not mutually exclusive. They need to do all of them at the same time. And, to be innovative and have a very strong, if you like, customer focus where you're changing the way that the customers are experiencing your products. If you're a financial institution, you can't do that at the expense of compliance and security. You can't do that without a mindset to being operationally efficient as well. So our customers are working through those problems. And the challenge on being future-oriented is that we don't really know what tomorrow's future looks like. We don't know what the next technology is. There are a lot of technology propositions out there in terms of things like distributed ledger and blockchain technologies. There's not a lot of evidence that they represent a better way of managing a database, for example, or a better way of managing payments, but it's out there, right? And customers are looking to make sense of that. We generally don't know whether technologies like that or the next technology will be surviving in the future. And I tend to operate more from a frame of, okay, I don't know what the future's like, but what do I think are the features of the future? And this is really important as customers and the industry is innovating. We think that future is open, meaning that there are new entrants wanting to do business with financial institutions. If you're working with payment systems, for example, many payment systems around the world are actually opening up their payment systems and allowing new entrants or third parties to use that national infrastructure and those payment systems. So the future is open. The future is information rich, meaning that many of our customers are working with big data, using different analytical tools and artificial intelligence to really help understand their customers better and to make sure that they're providing the right propositions to those customers. We play a large role in enabling that data-rich environment. So there's a lot of data that flows over that scaled network that I mentioned earlier. The other feature about the future, which we're sure will be present everywhere, is that it's really fast. Payments are not taking days anymore. Payments are generally happening in minutes, in seconds. And, you and I, Thomas, are used to experiencing that in our daily lives, right? And so customers have the same expectation when they're dealing with financial institutions, whether it be for payments or whether it be for processing a loan application or getting a new insurance policy. They're expecting things to be fast. And then the other bit, and this is sometimes a challenge for the industry, is the 24/7 availability. So I can go onto a travel industry website, for example, and book a flight. And I can really do that 7 days a week, 24 hours a day. You've been able to do that for decades. Traditionally, banking has been offered in a Monday to Friday, 9 to 5 environment. And that's being the ask now of the industry, and it's happening all over the world, is to really operate closer to a 24/7 timeframe. So I think those features, openness, the speed, the instantaneity of service provision, the 24/7 availability, and the information richness are the features that will be present in any future, regardless of the technology. They're independent of technology and agnostic of technology.
Right. No, I think that's a very good point. And then you didn't mention, different technologies like the distributed ledger. And I think that's, the recent venture between Swift and R3, I think, is just an example of those kinds of solutions that, looking forward in terms of what Swift is doing to address those trends in the industry. What else would you say are actions that Swift is taking now for the future to address and leverage off of these industry trends?
Yeah, so really two things. One is I'll speak to our mission and vision and what that means in the future, and then I'll speak to, at a practical level, how we're dealing with that, particularly in payments. Our mission really is to provide at a cross-border level the same payment experience that happens across borders, that is provided today at a domestic environment. So domestically, in a place like Singapore, we've got what's known as a fast payment system, FAST, basically 24/7 real-time payments. I can put money in your account, Thomas, on a real-time basis. That happens in most domestic marketplaces. It's happening in our region, in Australia with the new payments platform. It's happening in Hong Kong with what's known as the faster payment system. Pretty much any market of size has that experience of speed, 24/7, information richness in their domestic environment. We want to make sure that the cross-border payment experience delivers those same outcomes. And so our mission is really to enable payments from an account or another payment provider, it might be a wallet provider in any part of the world, to an account or a wallet provider in any other part of the world. And with the features that we're experiencing at a domestic market level, with that speed, that 24/7, that information richness. So that's our vision. We articulated this in a paper which is available on our Swift.com site. You can make that available to your readers. It kind of articulates all these things at a cross-border level. Your listeners might find that interesting. And then at a practical level, we do that with a service which is called Swift GPI. The GPI stands for Global Payments Innovation. And with that, we're solving very specific problems that have been around in the industry for some time. If I look at a corporate treasurer or a corporate customer, and we have many corporations that are connected to the Swift network, they come to us to reach bank accounts around the world. They've been suffering for many years in terms of speed of payments, not having transparency to fees, having information lost with payments when they're received. And so when we sat down and we spoke to corporations, we spoke to banks, we got some clarity around this problem set, and we've directly set out to address this with this Swift GPI service. So what Swift GPI does is, through a set of business rules that banks agree to be bound by and behave to, you have a same-day payment outcome. You have the ability to track a payment around the world. So for the first time, a payment actually has a unique identifier, similar to what you have when you buy a book from Amazon, and you can track that from the Amazon store to being delivered to your door. You can now track a payment with a unique identifier. Payments also have the transparency to fees. So the fees that are being taken or added onto a payment are actually published in a centralized database, and they're made available to the parties in the transaction. And there's an agreement to carry the information end to end with the payment. So these are a set of business rules, and banks have signed up to providing that service. We're at a point now whereby we have, out of our 12,000 institutions on the network, probably 9 or 10,000 of those make payments. We have about 3,500 of those have joined the Swift GPI service and are either providing it today or they're in very advanced stages of making that available. It's happening at scale, so we have well over 1 million payments a day being transacted over the GPI service. Every day we carry $300 billion in value in payments. I don't think there are many other payment networks around the world that are carrying that much in value across the world. Since we started this, we're at, I believe, something like $4 trillion which has been conducted across that GPI payment experience. And the outcome we've had, it's quite interesting. We've seen that whilst we set out to provide same day payments, the payments are actually happening quite a bit faster. So half of those Swift GPI payments are being completed in 30 minutes or less. Wow. About 40% are being completed in 5 minutes or less, and many in seconds. When we saw this, and we can actually track the payment now, so we know from basically a time stamping ability, we know when the payment started and when the payment finished for the first time. We're seeing them in seconds. We saw an opportunity there to actually serve a instant and a real-time cross-border payment need, and this is where I'm spending a lot of my time right now, which is on progressing a series of tests with different marketplaces on providing a near instant real-time payment experience at a cross-border level. So 2 weeks ago, we completed a test here in Singapore, actually, with this fast infrastructure I mentioned earlier. And what we're doing there is taking payments that start somewhere else in the world. So we've had institutions in Europe and in the Americas, in China, in Australia, send payments into Singapore and then onward through the domestic payment experience. So we're really marrying that domestic payment experience with the cross-border payment experience, and the results are really, really encouraging. We had the fastest payment at 13 seconds end-to-end, and the slowest payment was 25 seconds end-to-end. So you're getting a bit of an average speed, something along the lines of 20 seconds, where money is put in the end customer's account and can be used for another purpose. Right. And this is really important in a corporate context. If you're a small to medium enterprise, for example, in a place like Thailand, you're exporting around the world. If you're getting paid faster and you normally have a drag on your working capital availability, you're getting paid faster, you can actually ship the next order faster. So it's actually helping with the velocity of commerce around the world. And I see this as a means to actually fold more small to medium enterprises together with their financial institutions into better payment outcomes off the basis, for example, of the exports that they're providing. So that's Swift GPI. We've really set a new standard in terms of how payments perform at a cross-border level. We've seen great speed. We're looking at actually moving from testing real-time cross-border payment outcomes and turning that into productionized environments. We'll probably start that in Australia towards the end of this year, and a few other markets as well. So it's really a new normal in cross-border payments.
Wow, no, that's exciting. Specifically for this project, are you looking at this as a stepping stone for something that you are envisioning over the next maybe 10 or 15 years? For you, where is this going?
It's a really good question. So once you have that capability to do these cross-border payments on a real-time outcome, if you want to, and by the way, all customers don't value speed the same way. So if you're a large corporate, you don't always want the same speed that you might want for a more retail profile, cross-border, person-to-person type transactions. But once you have that capability where you've got the speed, you've got the tracking, you've got that pervasive reach that comes with the Swift platform, you can actually do a lot of different things with this. And one of our focus areas is to really use that asset and that capability towards expanding the service. So we're doing this actively in a number of different ways. One example is we're working with R3. You may have heard of R3, which is really a blockchain-based service whereby different companies are conducting commerce on the R3 platform. Those businesses need to get paid. And so R3 and Swift sat down and said, well, you've got this Swift GPI rail that connects up all the banks around the world, and I get a trusted payment experience. Can we look at how we can actually integrate that commerce experience that's happening in R3 with that really reliable and trusted cross-border payment experience? So we're working with them to introduce what we're calling at the moment called G-Link. Mm-hmm. G-Link. So it's really a payment initiation capability whereby we can take a payment from an external marketplace, an external platform, and carry that through that Swift GPI rail that's connected up to all the institutions. That's one. Another area that we think is quite interesting from an expansion point of view is working with e-commerce platforms. So e-commerce platforms, you have some big ones that we all know about. They're operating on a global basis. You have in most countries around the world different e-commerce platforms popping up as well. They're really a digitized service supporting exporting product from those markets in most cases. They're looking for improved ways of getting paid more efficiently at a lower cost, sometimes with speed. They're looking for the benefits of being able to track payments into their platform and perhaps help track payments into the different sellers that are selling in their overall marketplace. So we see a big opportunity to place the accounts that are existing with banks around the world firmly and directly intermediated into that payment experience with the e-commerce platform. So I think that offers a lot of value towards businesses that are using the digital economy and e-commerce platforms to export their products all over the world. They can get paid better, and they can move on to serving their customers better or processing the next order. So we see these kind of expansion opportunities.
Interesting. Okay. To circle back on a term you used specifically on the new normal, what does this mean for corporate treasurers? And what role do you see these treasurers playing in driving innovation itself?
So firstly, a bit about our corporate business. Our main proposition towards corporations around the world is if those companies are operating in different marketplaces, different countries, they're often dealing with different banking relationships. So a company, back to the Thailand example, may be exporting to a dozen countries, and they may have relationships with banks in each of those countries. The ability to, in a very harmonized and consistent way, to process those payments, to be able to reconcile those payments can be quite challenging. So the Swift proposition towards corporations is helping improve that multi-banking experience. So we leverage that reach, that 12,000 institutions that we have around the world, to provide efficiencies towards corporations and often towards their corporate treasury department, such that they can actually get paid in a very consistent manner. So when we look at corporates, and we have about half of the world's Fortune 500 companies have joined the Swift network. We're increasingly serving smaller institutions. So behind a lot of the direct connections I mentioned to the Swift network are a lot of smaller corporations that get the benefit of the network. We think that's about 100,000 companies globally that have some form of access to the Swift network and get that benefit. We're really about solving those frictions and those problems that corporate treasurers have. And if I look at this cross-border payment experience that I described, we're expanding that towards providing that service directly to the corporation itself, so through the bank, but such in a manner in which the corporation can consume the benefits of that service. And of course, in a payment scenario, you have the payable side and the receivable side. On the payable side, what the company is really looking at doing is being able to track that payment and understand where it is and get tracking outcomes and confirmations back to their environment. On the receivables side, they're interested in both the understanding of where that incoming payment is. And if you're a business that you're collecting monies in half a dozen different currencies and at different points of time during the day, there's quite a bit of value for a corporation to have very clear line of sight of the payments that are coming towards them in the currency they're coming at the time of day, and it really allows them to refine their view of how much cash they have or the liquidity they have, and to manage that differently. So on that receivable side, we're really focused on improving that experience of the incoming payments towards the corporation.
Okay. So as we begin to wrap up the conversation, is there anything that you would like to close on? Maybe something that you would like the audience to take away specifically on how Swift is adapting to the digital world?
Yeah, good question. I think one of the areas that your listeners might be interested in as well is that I know ICC is deep in trade. Yeah, you have a lot of customers that are interested in trade. We're doing a lot more work in trade as well. We have quite a large business today whereby we're supporting financial institutions with financial instructions for documentary finance, for example, in trade. When we talk to our customers, there's a number of different problems they're experiencing. They are experiencing challenges in managing that compliance problems. I mentioned one of the core problems, compliance and security. Almost every market I visit and I talk to customers in, there are challenges with managing fraudulent transactions on trade. One example of how we're dealing with that is in India. We have an initiative which is very specific to solving frictions in trade, in the domestic trade environment in India. And one example of something we're working on there is there's a problem of having fraud based on the presentation of the same invoice by two financial institutions for financing. So identifying that duplicate invoice, being able to do that adds a lot of value in terms of stripping out the potential for fraud. So we're working with a partner there in India. They're called Money2Go, and they're connected up to the Swift network, as are our customers in India, and they're providing that ability to actually match up the invoices and identify a duplicate invoice there. We went through a testing process, and we're in a process now of having, if you like, a soft live approach where we've got a few customers that are doing these transactions over the network. There's a lack of standardization in trade as well. So for the listeners that are following what's happening with the different trade consortia that are developing, many of them are following a DLT or a blockchain-led technology approach, whereby the distributed ledger is being used to help, I think, with the multi-party management processes that go on in trade. You have banks involved, you have corporations involved, you have customs and shipping companies all involved. There are many parties. There's probably a story towards distributed ledger solutions with that multi-party environment helping with that process as well. We see, though, a need there with the development of these independent consortia that they really need to be adopting the same standards, so that once they're at scale, an institution to use one trade platform over another, they don't have to learn new standards for financial messaging. So that whole standardization piece is a bit of a challenge at the moment. When you have different consortia develop, you're having fracturing and fragmentation happening in the industry. So there are probably roles for organizations to help with connecting those environments up as well. So we see a whole range of different problems in the trade industry, and we're about really taking what we're good at, which is things like providing that very reliable cross-border payment experience towards an external platform, in this case a trade platform, being able to do that as a cooperative where we're focused on solving problems at scale across the industry. I mentioned things like the G-Link service, which is about taking that payment initiation into the environment as well. So to the extent that we can help with stripping out friction in the trade environment, we're really interested in doing that, and we think we have a lot to offer that industry as well.
Absolutely, absolutely. No, I think that's definitely something that the ICC has also been working, in that same light. And I think there's a lot that we would be able to collaborate on this, and it links
I
back to a
hope
lot
so.
of
Looking forward
conversations.
to it.
Yeah, absolutely. And I think you touched on a point that is specifically relevant for the ICC Academy when it comes to educating on very specific topics. And I think that hopefully we can also play a role in making sure that clients and even on the financial industry side, everybody's up to speed and making sure that there's a standardized approach. So yeah, thank you again.
You're very welcome.
Thank you for coming in. I'm really glad that we were able to do this. And I hope, like the audience and myself, I definitely learned something new. So as a reminder, we are hosting live broadcasts every month. So sign up for our website for free and subscribe to our YouTube channel. And ladies and gentlemen, this has been another episode of the ICC Livecast. See you next time.